Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Mike Sokoll. He's a Senior Managing Director on Nasdaq's Markets Intelligence Desk, and we are here for the weekly markets review from the mid. Thank you so much for joining us at MarketSite. And you know what? Another red day, another volatile market session, and it seems like we keep coming back to the same reasons why the market's under pressure.
It seems like every day it's the same answer. What's driving the headline? What's driving trading? It's the headlines on trade, U.S., China, and the perceptions of whether or not there'll be a successful outcome or not is really what it boils down to.
Right, and then we also had weak Chinese economic data and weak European data as well.
Yeah, and the European PMIs have been a little bit weaker, and people are starting to look at whether it's Germany or Italy or the Brexit discussions, all of that as being a problem for Europe. Now China with some weaker, the growth numbers that they put out weaker than expected, but still pretty strong growth, at least compared to the U.S. But folks wonder, is that just another reason why China is slowing down, coupled with global slowing down, and that's a reason to sell stocks?
Right, but even when we look at economic data and projections, they might not be as high as previously thought, but it's still growth.
It's still
pretty good. And I think there's a big disconnect there.
Yeah. And I'd add, if you were in a bull market mentality, I think you could even argue that weakening number, back in the day when people wanted to buy stocks, you could say, okay, that maybe that brings the Chinese to the table a little bit more quickly, and that's actually bullish. So it all depends on how you want to look at it, and people just seem to be ready to find reasons to sell stocks, at least in the last couple of weeks.
Right, well, it's interesting you brought up Brexit, so now that vote has been delayed until 2019, so you have uncertainty there, Europe, China, even here. It feels like there's that missing unification factor somewhere, and there's just a lot of disconnects and uncertainty in the market.
Yeah, and Brexit is kind of coming to the forefront now. People wonder if it's messy or disorderly. What does that mean for some of the contracts that are written? It's not entirely clear what you would do if you didn't have an orderly, removal of the European of Britain from the European Union.
Right. I mean, you're even seeing what's happening within London, the city itself. How banks are starting to look to exit, whether they get a deal on Brexit or not, just because it seems like this is going. Whether they get the deal or not, it's going to continue to be a conversation, and who knows if another vote comes up again.
Yeah, and they have to do some advanced planning. So if there's something that needs 90 days to work out, you already passed that deadline in some cases, so you really start to have to make decisions right away.
Right. Well, all right, let's wrap this up with the trading week ahead, and even though we are just about into the holidays when everyone's checking out, there's a lot of headlines that are going to hit next week. Let's start off with the FOMC rate decision. There were expectations that we were going to get one more hike, but that has certainly been dampered over the past few weeks.
Dampered. I think the betting money is that you'll still get one more hike in December. Maybe the chances 75% instead of the high 90s where we were, but the betting money is that you would get another hike in December. The question is in 19, what do you get? Right now it's about a 26% chance for a March rate hike to the next level. Back not too long ago, that was over 50%. So that's definitely dialed back. And if you go all the way out to December of 19, you still have a 1 in 3 chance of only that one rate hike. So 19 could be one and done or none and done for the Fed, and they're going to be what they call data dependent, which pretty much means they're just going to watch everything, including U.S. data, but also globally and the market probably, and make a decision based off that.
All right, and then speaking of growth, we'll have GDP numbers coming out as well. But witching expiration, which happens once a quarter when you have all of the different types of contracts expire, how impactful is that during witching week?
Yeah, quad witch, especially around the close, is big for the volumes.
Right.
You don't get a lot of price dislocation, but certainly the options expirations has an impact. There's any number of indexes. S&P, Russell does some IPO additions. Nasdaq has the Nasdaq 100 and biotech and a whole bunch of other indexes. All of that happens. It's a big liquidity event at 4 o'clock. That's a chance for some people, if they want to access that liquidity to buy or sell, also be involved. So it'll be a busy end to what's probably the last full week of trading for the year.
All right, and I just realized this is our last weekly market review. I'm in Philadelphia next Friday, then we're all off basically for the last week of December. So 2018, it goes by really quick. Thank you for all of your support from the Markets Intelligence Desk throughout the year. And thank you for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.